Hey, how's it going, guys?
Going good, man. Welcome back, Cairo.
Yeah, I got some great news to report here. I was listening to Wendy O earlier, and she is predicting $25,000 Ethereum. Now, what I know about Wendy is that she is a very conservative predictor. So if she's predicting something like that, she must, like, with her connections, must know something.
Nice. That puts the sack bag just over 4 billion.
That's right.
Okay.
That's right, man. I think like if it goes to 20,000, that kicks HEX all the way up to $7. Goes to 25,000, we got like a $10 HEX, and goodness knows what Pulse HEX is going to be doing. The PulseChain version of HEX. I can't really even think of like how high that thing could go.
Thank God for this man.
Woohoo.
Whoa, bringing us the hot news of the day. You know, Pedro, come back. We got a debate to do.
Yep. Y'all watched the Jackson Hole speech earlier?
I didn't watch the speech, but I saw the outcome yesterday morning. Everyone's like, "Oh, bearish. Oh, they're not going to cut grade." I'm like, "Come on, this got to be a joke, right?" And then Powell gets on there.
Yeah, I'm thinking October might be a time where we should take some profits, but I don't want to say like the bull run has begun yet, because still we got the Treasury above the 10-year above 4%. So I don't want to say it's begun yet, and I also think there could, when they do the first cut, there could be a pretty hard dip there. But then after that, that's when the bull run could really begin.
I like it. So you're thinking September rate cut, and then October, November start to kick off?
That's right. That's what I'm thinking. If we get the rate cut in September, because like there's still a chance that Jay Powell could decide not to do it, because we still got about 3.5 weeks before that meeting. But
fire him.
I mean, you take a look at the Fed and the makeup. Adriana completely up and ran out of nowhere. Like usually when somebody would quit the Fed, it'd be like months before they actually leave. They'd be finding a replacement. She just ups and quits like they were digging into her or something. And then the very next day on the other Fed governor, Cook, they are investigating her for mortgage fraud. So that tells me that Trump really wants to stack the Fed with all of his people, kind of like, how a president would want to stack the Supreme Court. And they want the Fed governors to be ones that would be doing his agenda of cutting and a weak dollar, which is amazing for us. And it tells me like what they're doing is they're doing anything they can. They probably got the IRS investigating all the Fed governors to do it with, or anything any dirt they can find on them. Kind of like, the whole Al Capone untouchables thing.
Every time I look at Jerome Powell, it seems like he's trying to do the right thing for inflation and all that stuff. If I'm being a generous view of him, but at the same time, I'm like, dude, this president is here for number go up. So like, it's just not a good time, Powell. Not a good time.
Yeah. I don't hate Powell because I understand like why he's doing what he's doing, but still, hey, if you did 3 rate cuts last year, but you haven't done them this year, when we got like a lot more going for us, it makes no sense to me.
Yep. All right, everyone. I've had very few suggestions for debates in this thread, as I kind of expected as well. However, there was one I thought of that me and Pedro are going to get to initially to kick things off, because that's the idea on the table right now. There's another one here from Retarded Investor.
Who's 2025? You can't say that.
I don't monetize, so I can say whatever I want, I think. So how are we still down 99% after 4 years?
The 10-year Treasury is above 4% is the easy answer.
Easy for some. Most will not get that.
If you're slow.
I can break it down if anybody wants a deeper explanation on it.
We could do a meta debate with if you could imagine this avatar on the other side in a way.
Yeah, if somebody can cosplay as him.
Okay.
Somebody cosplay, somebody go, oh, hi, I'm the investor.
Sloth, you up for that?
We could debate why HEX on EW is the best HEX.
Because it has the lowest liquidity.
It's the lowest liquidity. It could pump the most. It's only 10x off the price of HEX on Ethereum. Just saying.
This one's pretty funny. When 2 alphas meet, they both realize their name is Dick. See, I like that one. That's funny. You can post. You can chill if it's funny. How about that? This, I mean, okay. I don't want to make that official rule in the comments, but if it's funny, it's less likely to be unkept. We'll say that. Go ahead before me and Pedro get into it too, with how we speak to this this very loyal patron here.
Who wants to go first? Because I got a lot to say about that.
Bring it.
All right. So yeah, it looks discouraging that we're still down 99% after 4 years. But I've done this multiple times on my stream where I just pulled up CoinMarketCap and showed several other coins, even on page 1 of CoinMarketCap, that are down over 90%. And then when we go to the next page, we see a lot of things that are down 99%. So it's not uncommon. And the reason for it here, I mean, we're right in line with the rest of the market. And the reason for it is because the 10-year Treasury is over 4%. It's at 4.25 right now. And what that is telling you, what is communicated by the 10-year Treasury, why every financial analyst and investment analyst pays attention to it, why it's so important, is that it tells you how comfortable the investing public is with even investing, because a Treasury is supposedly risk-free return that you can get. And if people are not even happy with a risk-free return, or they're not even feeling that it's safe enough to go buy a 10-year Treasury that's supposedly guaranteed, and so they're not buying it, the price of it is going down because no one's buying it, so the yield is going up. And when that yield goes up above 4%, that's exactly what's being communicated, is that the public is not comfortable with investing. And it also gives more strength to U.S. dollar bills. That's why the Dixie, I mean, it's down today here. It went down to like 97.7. But the dollar strength is greater right now because you can put it into a Treasury or put it into a money market that invests in Treasuries and earn those handsome interest rates. So why would you take those dollar bills and put them into risk assets, especially crypto, the most risky asset? And then what else we could say about this 10-year Treasury is that it affects all other kinds of investments because it goes into what we call risk premiums. Like if I'm looking at a stock or if I'm looking at a crypto, I need to set a standard for what I call the risk premium, basically saying this is what I demand to get as a return to even think about taking risk. And the risk-free rate is part of that equation. But I want a little bit more than the risk-free rate. So really a risk premium right now would be something like at least 8%. But the higher that the risk-free rate, the 10-year Treasury is, the higher that risk premium is, and the less likely a risk asset is able to meet that risk premium and justify that kind of investment. I mean, I go on all day about this right here. Like, you guys want more, or have I said too much already?
But can I ask a question? Hi guys, by the way, sorry. I'm
Welcome,
going to
Pedro.
speak like in hey man, sorry, yeah, my internet kind of sucks, so I'm not sure if you can hear me well or not.
I can hear you.
On my
Can't
phone,
see
by
you,
the way.
so we can hear
okay,
you.
Perfect. Okay, awesome. But yeah, I got a question. So how do you explain, Bitcoin pumping from 20K to 120, or Solana, or fun memes, or I could pick like so many examples, right, of things that have been pumping for the past 1-2 years, right, including like assets on PulseChain, right, like PDI or other P copies, for example. So how do you explain that?
All right, let's take them all one by one. Because like Bitcoin, what we know about Bitcoin is that it is its own case here, because in past bull markets, it has always ran ahead of the rest of the crypto market. And that's just because it's the oldest, it's the easiest to buy, and it has the most holders in it and everything. And in this particular case right now, we're talking about Bitcoin ETFs. There's actually a Bitcoin mutual fund already too. And then you have the Grayscale was involved with it as well. And you also are getting to hear about government strategic reserves in Bitcoin. So it makes sense that those things are pushing it up. There's a lot more institutional activity in it, whereas all the other cryptos don't have that yet. They're all further behind before like institutions have even gotten to them yet. Solana, that's another case. It is an older one, and it has been doing a lot more activity in this cycle than it had in previous cycles. But also, we got to remember, Solana, it got beat down pretty bad before it had this great big run up. A lot of people were thinking after FTX that Solana was going to die and would never come back. So it really came back from the dead, which is making its current run look so great and everything, because when you're at 200, but you started at like $6 or $7, yeah, that looks awesome and everything. But we also got to remember, hey, Solana was at like 260 at the top of the last cycle, and it fell from grace from there. So really, a lot of what it's got right now is it's just got back some of what it had before. I think that like the highest it ever went to so far this cycle was that it kissed 300 for a little bit. But that was in December when everything was going up just before the last rate cut that brought everything back down. So that would be the story with Solana. I think we'd have to just look at all of these coins on a case-by-case basis for the most part, because there are some outliers, like especially on PulseChain. Like there are some outliers on PulseChain. We got like some assets that go up very well, but is it really an apples-to-apples comparison to compare a obscure meme coin on PulseChain or some other kind of small community on PulseChain to say the original HEX or PulseChain version of HEX? I don't think that's really a good apples to apples comparison. So yeah, some things are still going to have an outlier run at first, but I also think this here, like knowing what they're going to be doing with stable coins and how they're going to use stable coins via the Genius Act to make the Fed less, to make the asset market less dependent on the Fed's actions, and how they're going to use stable coins to bring down the yields on treasuries. I think none of these coins, not even Bitcoin nor Solana, has even done a fraction of what it's capable of. Because really, Bitcoin hasn't even done a 2x yet from the previous top. This is good. Keep hitting me with some more right here. Like any other bearish like feelings or fears or anything I can alleviate? Because this is what I like doing.
Iris, I'm sad because HEX is down, and I saw a meme coin on Solana that was up 50,000%. So why shouldn't I just go buy that instead?
That meme coin stay 50,000%? I mean, is it still climbing? Is it?
No, it rugged 4 minutes after that.
Exactly. Like you could possibly get that 50,000, but you got to know when to get in and get out at just the right time.
Yeah, I think like there's something to be said for price history, but also like liquidity history, right? When it's like we have now established beyond a shadow of the doubt that HEX is not a rug pull, HEX is not a scam. You know, there's even at the lows there is ample liquidity. Think what that liquidity will be at the highs, right? Because I think everybody on the screen here understands that if HEX does a 10,000x from the current, then its liquidity essentially will do a large number of x's, not necessarily 10,000x, because some of it will go into other things, but there'll be a lot of liquidity.
Yeah, we're still only at 352 million PulseChain version of HEX for liquidity right now. So still, that's just under $4 million there.
So if I wanted to buy 5 million PulseChain HEX, could I do that?
If you want to buy 5 million, with that much liquidity here, yeah, we could buy 5 million, but that's going to have like a major effect there on the price. So will your 5 million all get the same price? No, because like each time with each execution, it's going to push the price up for just about each token, kind of like a line of dominoes going upstairs.
Nice.
You're like the bear personal trainer. You're going to work them in, you're going to massage them into a bull.
That's right. Let's kill all the bears here. What else has everybody got? Anybody got?
Come on, chat.
Like nightmares or like
Yeah,
any bearish nightmares or things you see on Twitter?
What would you say to the person who's riddled with bear market PTSD after 3 years of going down minus 90% in our assets, and now they're scared of every pump that happens, that it's just going to be a repeat of before?
Sometimes you just gotta shut the FUD up.
That's what we would tell them.
It's the first thing I'd say, yes. But here's the other thing is that Do you understand what causes bull markets to occur? What causes the number to go up? Because I'll tell you, the more you understand that, the more you understand the cause and effect of it all, the less bearish you're ever going to feel. Because when you know the process inside out, that, you know, first it's weakening the dollar, it's lowering the interest rates, it's the money printer going burr. Those are the things that cause the crypto bull runs to happen. Because you got to remember, our coins, our assets, what are they priced in? They're priced in dollars. The weaker the dollar, or the more dollar bills that are in circulation that need a place to go, the higher our asset price is going to be. And when we look at, you know, this past almost 4 years now, almost 4 years of bear market we've had now, when you look at it, we've had a strong dollar because it started getting really strong ever since 2022 when the bear market began. And we've had high interest rates. They were higher than they are today. I mean, like the federal funds rate went all the way up to 5.5%. So it makes sense that we've had a bad several years. But now that we're at a turning point, like a Fed is saying, well, we might pivot. We might pivot. I mean, there's still a chance that Powell could rug us coming up in September. But still, when you look at who is going to be replacing him, or who has the authority to replace him, and what he wants, what the president wants, and what he's willing to do right now with chasing some of these other governors out. I mean, maybe did you see that one press conference where they had their hard hats on and Trump was like trying to embarrass him right in front of the camera and everything? You can see he wants Powell gone as quickly as he can, and he wants that Fed playing ball with him as quickly as he can. They are going to pivot. They are going to have to turn around. So it is going to happen at some point where the dollar will start getting weaker, and as that dollar bill gets weaker, asset prices across the board, not just crypto, but stocks, gold, they all end up going up for that. Because you notice, like, historically, I think Sami pointed this out here, historically, stocks and crypto seem to peak at the same time.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. You gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore. You gotta shut the fuck up.